Hi, everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is my Forbes colleague, senior editor Dan Alexander. Dan, thanks so much for joining me.
Sure thing, Brittany. Thanks for having me.
The Forbes 400 list is out, so first, a big congratulations. Second, we are going to be talking about someone who has been on and off the list over the past few years, and that someone is former President Donald Trump. You write for Forbes just how Donald Trump made billions from politics, but if you could take us down memory lane back to January 2021, when it wasn't looking so good for Donald Trump, if he was ever going to jump into politics again. He had just lost the election. We just had those Capitol riots. Biden was being inaugurated. Take us back to that time.
Yeah, both politically and financially, he was in a really difficult place. Remember, the country at the time was still struggling with COVID. His hotel businesses had been hemorrhaging money over the last year. His licensing businesses had essentially disappeared. His commercial real estate properties, many of them were having trouble with, people just not showing up to work. And so all of a sudden, the demand for those sorts of properties was much less. Fortunately, people were paying rent in the meantime, but the values were way down. So he comes back to the business world really with this kind of broken up, rusted out business that is, down by more than $1 billion from when he got into politics. And then he has to figure out, okay, well, what's next?
So, talk about that broken down business for us, because how did the Trumps handle their family business while their father was in office?
So Donald Trump put his two sons, Don Jr. and Eric, in charge of running the day-to-day operations. He didn't sell the business. There's some indications that Donald Trump, while he was president, was still involved. But in terms of kind of the day-to-day stuff, that would have been Eric and Don Jr., with the help of Alan Weisselberg, who was the longtime CFO of the Trump organization, who's now been put in jail twice for financial issues. So those guys were sort of running the day-to-day. And, I talked to Eric about the state of the business in early 2017. And like his dad, he was sort of, keeping an upbeat tone, always a salesman. Things are going well. Assets are doing well. As we look at the financials now, we realize that assets weren't really doing very well. There was a significant hit to the business when Trump became president at the outset. And to Eric's credit, he also conceded that there were some challenges. For instance, he noted that they couldn't expand like they had planned to overseas, which you can see that in the numbers. The licensing and management business, which had been sort of a growing part of the empire, really just sort of dissolves while they're in office, and they're just getting lingering, fees from various deals around the world. But they're not doing new deals. They're not getting, big checks for signing up new partners or anything like that. So you've got this. The sons really are sort of just, watching the company, making sure that it can continue running, but they're not doing major expansions of the Trump organization, not huge developments or large strategic shifts or anything like that. Mostly just trying to keep their hands on the steering wheel.
And in 2021, we know that the year didn't start off well for Trump, as we talked about earlier. He's out of office. He also, for the first time in 25 years, didn't appear on the Forbes 400 list. So talk to us a little bit about the bounce back financially.
So the core of how Donald Trump rebuilt his fortune started about a week after he left office. And he hosted a couple of guys who had once been on The Apprentice to Mar-a-Lago. And they had ice cream, they had hamburgers, and they talked business. And during that meeting, these guys sort of laid out a vision for what Trump could do with his post-presidency in terms of business. And saying, what if we created a Trump-branded media and technology company? Think TV, think social media. Remember, this is right after the Capitol riots. And so Trump was banned from Twitter. And many of the service providers, online service providers of things like web hosting, had booted companies that have been supportive or entities that have been supportive of the Capitol riot. And so they even wanted to do like some web hosting services. So it's all built up around this idea of, we've been ousted both politically and also technologically. And now we're going to build back this business with Trump's name on it to create this sort of conservative ecosystem in tech and media. And the best part of the pitch from Trump's perspective was that according to somebody who was involved with the deal, he didn't have to put up any money, but he got 90% of the company. And so Trump, who at the time didn't have all that much cash, is sitting back saying, well, who knows if this thing's going to work, but it's not going to go terribly for me because I'm not really putting much into it. And so that began this process of creating this company that to this day has not been able to become a successful business, but nonetheless has gotten a lot of people who love Donald Trump very excited about it. And it's gone public, and the shares have traded like mad, and Donald Trump's stake is now worth roughly $2 billion in that entity. And that makes up, at this point, about half of his fortune. So that's how he came back.
And for anyone who's covered politics during the Trump presidency, we all know that one tweet from Trump could put the news cycle in a tailspin that could last for days. And then here's born Truth Social, Trump's very own Twitter. You called Truth Social one of the most absurd businesses in America. Why is that?
From a financial standpoint, the numbers make absolutely no sense. This is a company that takes in less than $4 million a year in revenue. They, over the past 12 months, lost hundreds of millions of dollars on a net basis, more than $300 million. And yet people are valuing the thing at billions. So those numbers don't add up. But people aren't valuing it based on the business. People are valuing it based on Trump. This is a proxy for betting on Trump. And that doesn't make any financial sense. But if people are willing to pay whatever they're willing to pay for these shares, then you can get to a really big number. And since Donald Trump owns more of the shares than anybody, it's a huge amount of money for him. If you were to take Donald Trump out of this and say present to a economics professor, okay, so you have a business that here are the financials. What do you think this thing is worth? Or if you were to take it to any analyst on Wall Street, most people would laugh you out of the room and say this thing's worth zero. But with Trump, he breeds this immense amount of excitement around it, and that has converted into billions of dollars.
And he himself was excited about it, yet he did not invest much of his own earnings into the business. Why is that?
Well, Donald Trump back in the day took a lot of risks, okay? Late 80s, early 1990s, borrowed a ton of money from a lot of people, put his own money, what little of it that he had, into huge projects in Atlantic City and in Manhattan. Many of those projects failed. And since then, Trump has become much more reluctant to take huge gambles. And so this was just a continuation of that philosophy that he developed after he was able to survive one of the hardest financial periods of his life. And by not putting in any money, Trump doesn't take any risk. If the thing goes to zero, Trump's basically where he started. But if the thing goes to billions, which is where it is, then that's all gravy for him. And so at this moment, that looks like it might play in Trump's favor. Although we'll really see what the effects are when his shares are freed up and he can presumably sell them or leverage against them or somehow get cash out. And then we'll get to see what his final return from this whole venture might be.
So after his burger and ice cream meeting, with his initial meeting about Truth Social, he then meets Patrick Orlando. Talk to us about that meeting and how the focus shifted there.
So Patrick Orlando comes into this as the promoter of a SPAC, which is a special purpose acquisition company. This is a company that's essentially just a pile of cash that's publicly traded. And the way that Trump's business is going to go public is by merging with this already public pile of cash. And that pile of cash will then go into Trump's business and could theoretically be used to build out more platforms. So Patrick Orlando comes to Mar-a-Lago to sign documents in October of 2021 that are going to set up this whole merger. And this is going to put nearly $300 million in Trump's business, give it some significant cash to be able to operate. And Trump's excited because he's going to go back to the public markets. and potentially get a huge windfall. They meet, they sign the papers, they take pictures in Trump's office, in the different parts of Mar-a-Lago, lots of smiles, lots of fist pumps. Everything seems great. Patrick Orlando is very excited about it. He's talking to his colleagues, holding champagne, saying, I really think that we can build a $100 billion company, and this is the team to do it. Ultimately, he was wrong. It was not the team to do it, and he was certainly not the person to be a major part of that team.
And talk about just how problematic that SPAC merger was.
Well, it runs into all sorts of investigations, and from the SEC and various other federal authorities. And part of the problem was that, according to the SEC, Patrick Orlando had created this SPAC with the intention of merging it specifically with Trump's company. However, in SEC documents, his SPAC told investors that it had not picked a company that it was going to merge with. And so you have sort of this, what appears to be a pre-baked deal, and that's not allowed. You can't tell investors one thing and actually be doing a different thing. In politics, you can lie. In business, with the SEC, much harder. So Patrick Orlando ends up getting fired from his own SPAC, and then the SEC accuses him of fraud. The SEC also has its own issues with the SPAC, and that holds up the merger. This extends, well beyond when most SPAC deals are supposed to close, and they keep pushing it back, and it ultimately proves very expensive for the SPAC. They have to pay an $18 million fine to the SEC in order to get approval to merge, but then they do, and they make that payment, and they merge, and investors don't care a lick about it because everybody is just so excited about the idea that they can bet on Donald Trump in a publicly traded stock. And so they start bidding up these shares to numbers that from a financial perspective make zero sense.
So talk about those numbers a little bit, because you've tracked the ebbs and flows, if you will, of the stock prices of Truth Social and how it's impacted Trump's fortune. So talk to us a little bit about that.
Sure. So right after the announcement of the SPAC deal with Patrick Orlando, the day after that Mar-a-Lago signing, this becomes public and the shares start trading. And it got off to a little bit of a slow start early in the morning, but by the end of the day, it was up from $10 to $45, and then ultimately surged at its high point to $175 a share. Now, at that point, investors were implying a post-merger valuation of this entity at about $30 billion. This is for a company that didn't really exist, okay? They didn't even have Truth Social at the time. It was just an idea. And you'll remember that Twitter, which was a real company with hundreds of millions of people on it, wasn't even worth all that much more than that at the time. So this made no sense at all. Ultimately, the shares did come down a bit. And what has happened over the years is that as Truth Social gets attention, people talk about it, the shares tend to go up because it's a bet purely on emotion. People who've never heard of this thing hear about it and they're like, ooh, I would love to invest in that. And so they go and they buy shares and it moves the stock price up. In those lull periods where you hear less about Truth Social, the stock tends to trend downward. And over time, although there have been these massive peaks and low valleys, the trend is that things have gone down. And that happened when the two companies actually merged. It went way up. Everybody got really excited. At that point, we started valuing Trump's fortune based on these, publicly trading shares. It got up to more than $8 billion at one point, which was higher than it had ever been in Donald Trump's entire life. But then it has trended down over time. And so by the time that we locked in the Forbes 400, Trump was worth $4.3 billion, with the majority of that, $2.2 billion, coming from shares of the Trump Media and Technology Group. It has continued to peter off in the couple of weeks since then, and now, he's roughly at $4 billion, maybe a little bit under.
You mentioned earlier in the conversation that if you presented this business to an economist, you would be laughed out of the room. But what does Donald Trump think the value is of this company?
Donald Trump sort of showed his hand in one of his financial disclosure reports. So before the two entities merged, he said, and he had to, list what he thought this business was actually worth. And he said that he thought it was worth $5 to $25 million. Now, this is at a time when investors were actively buying shares of the SPAC, implying a multi-billion-dollar valuation. And so Trump himself has, in a way, sort of said to his own investors, what you're doing doesn't make any sense. But of course, he said it in a filing with the government that most people aren't looking at. When he's in front of the TV cameras, he says, this is an amazing business. This is the future. This thing, I'm staying in it. I'm not wanting to sell my shares, which really helps people get excited about it and think that maybe it is actually worth some of these crazy numbers that they're paying.
Forbes is reporting that he is now one of the 400 richest Americans. He fell off that list just a few years ago. So from a purely financial perspective here, why would he want to go back to the White House? Because right now he's neck and neck in the polls. He's richer out of office than in office.
That's right. Although you have to remember that when he went into the White House the first time, it was sort of a surprise. And his fortune wasn't tailored to succeed as president. Okay, this was a business that was hotels and real estate. A lot of people aren't going to want to go to your hotels all of a sudden. Well, now he's largely out of the hotel business, so he doesn't have to worry about that as much. He had these big management and licensing contracts that went away. Well, most of that, the damage is already done. What he's got now are new management and licensing contracts in places like the Middle East, where people might still like it and maybe even like it more when he's president. And then he's got this social media business. Remember, divisiveness is not good for businesses generally. Divisiveness, however, is good for social media businesses. So Trump's fortune is now positioned in a way and has changed enough that being in office now probably will help him, even though the first time he was in office, it didn't help him.
Talk to us a little bit about that. And do you think that he will learn lessons of the past? Because trying to monetize the presidency really backfired on him in his first term.
We'll see. Trump is, he plays the same cards over and over again. So we'll see, if he has learned various lessons. But there are things that he could do that would be smart business moves. For instance, he could say, hey, look, the first time that I was in office, it was really difficult having this business and having all this attention on it. And I've decided that this time I'm going to divest my business. And that would be a smart financial move because you wouldn't have, in the real estate assets, you wouldn't have all the problems that complicated them before. Now, then you've got the social media business. In that business, he could say, well, I'm still going to remain a shareholder, but maybe I need to take a little bit off the table or something like that. And that would be wise of him because it would allow him to presumably cash out at these sky-high valuations. What's Trump actually going to do? If history is any indication, he's not going to do much. He's going to, hang on to his assets and see what happens. And it could be that the real estate assets suffer more. It could be that the social media business continues to get people excited, maybe even more excited when he's in office. But all of this is unprecedented, and so we just kind of have to wait and see.
Something else that's unprecedented for Donald Trump is certainly the mountain of legal troubles he's facing and has faced in the past year. How are they going to impact his fortune?
It's a big problem for him. Donald Trump right now, including interest, owes an estimated $566 million in legal costs. That's due largely to his fraud case in New York, but also the two judgments in E. Jean Carroll cases. This is the woman who accused him of sexual assault in New York years ago. Those two cases have put huge financial strain on Donald Trump. Right now, he has about $413 million in cash by our estimates, which for him would be a ton of money, should give him lots of freedom and flexibility. Instead, those are outweighed by these massive legal liabilities. And although he's appealing the cases, should he lose, he's going to have to hand over the money. And while he's appealing, those are continuing to accrue interest. So he's millions of dollars, every few months are being added to Trump's liabilities because of these lawsuits. And so that's just hanging over him. Now, one area that he could quickly get a lot of cash is the Trump Media and Technology Group. And if he sells shares of this company, suddenly his balance sheet will be in much better shape. And so that's certainly something to look out for. If he sells $200 million of shares, well, he still owns a ton of the company, but now his personal balance sheet has a lot more freedom and flexibility. And that huge weight of those legal costs isn't quite as burdensome as it was. So look out for that in the next few weeks and months.
Dan, something that's not so new is rich people running for office. But what makes Donald Trump different?
Rich people usually run for office and lose money. And Donald Trump did that, and he lost money. But now he's running for office, and he's made a ton of money off of it. When Trump left the White House, he comes away with a new asset, which is crowds of people who are willing to buy virtually anything from him at almost any price. That is NFTs that he's selling, these superhero cards of him flexing his muscles or whatever. That's memberships to Mar-a-Lago, which are getting more and more expensive every single year. They're now going for rumored up to about $1 million. I mean, these are numbers that don't make any sense to people who are in the club business, that somebody would pay for that. But this isn't a typical club, and people are willing to pay huge numbers to be a part of Donald Trump's spectacle. It goes to, he just launched these digital coins. He's selling coffee table books full of photos in the public domain. All of these things are, he's selling assets that if you look at them for their intrinsic value, there's not much there. But people are willing to pay huge, huge amounts of money for it. And by doing that, he has more than anybody else, and at a greater scale than anybody else, converted the presidency and converted politics into a way of profiting.
And he's ping-ponged off the list over the past few years, back on it in 2024. Do you think in 2025, whether he wins or loses the White House, we are going to be talking about him now as a member of the Forbes 400?
Well, it's a very good question. I think that it's largely dependent on what he does with the shares of the Trump Media and Technology Group. If he sells those shares, he will have locked in huge gains, and he wouldn't lose that money. If he hangs on to the shares, as he says he will, this company, the financials of it suggest that it's going to continue to decline. And so he could lose a tremendous amount of money simply by doing nothing. So if he sells the shares, yeah, he could stay on the Forbes 400 forever. If he doesn't, would not surprise me if he falls off in the near future.
Well, Dan, per usual, I appreciate your reporting. Thanks so much for joining me.
Thank you, Brittany.